This is just AMZN for Friday, June 21st, 2019. Just looking at Thursday and Friday this week and seeing some similarities I just wanted to highlight. As we opened up Thursday, we consolidated. That was a bad one. Let's redraw that one. There we go. Consolidated in the first half hour or so. And then on Friday, we consolidated for almost an hour from the initial open. And then obviously Thursday breaking down, Friday breaking out. But in both cases, we came right into the 1925 price and rejected it. I mean, we came crashing through it on Thursday, retested into it, and then rolled over. And we had the very similar kind of rollover on Friday. So I'm sure that some of the people who were getting bearish here on Thursday, we're doing it again on Friday. And sorry, I've now covered up everything. But I mean, this is an amazing evening star reversal right here. It's also a very nice inverted hammer candle, that one, right on the 1925. The challenge with this candle is it's making a higher high. And so some folks were buying. And so, you know, if you've got in your plan to not take a breakout, you know, wait for retest or not go bearish when it's making a higher high, then you wouldn't have been getting in. The other way to look at this is you got a bit of a neckline here. I'm going to draw it right below the close of this candle because this actually forms the neckline on the closes. And then what's nice is it retests right back into that level. And you even had a better entry here going bearish. And if we look at the puts in just a little bit, you actually had a very similar price on the put here and here. Just depends on which put you select. So from here, it had that pretty quick move bearish, came right into the apex of that consolidation from the open. And that would have been a great target to exit all or to exit some, but then you would have had to just wait and wait and wait all through this, losing all your, not all your premium, losing a lot of premium as your time just, you know, just dwindled away until finally towards the end of the day, it actually collapsed. Not something I want to hold through on a Friday expiration using Friday options because that's just going to, you know, deplete all the value, literally all the value out of the money. But let's go look at some options and see what we could have done. So switching over to the calls didn't do too much. They just continued to go and make lower highs pretty much until you got down into the $1 to $2 range. And then coming back in here, this actually made a bullish engulfing and then started a breakout, making a higher high than all of these and actually got to a higher high from the open. At that point, you could have actually been getting in this for about $2, 2 by 1, something like that, and held that to get to 2R up at 4. We're going to quick trade, trading aggressively, a run up into this price would have worked in this case. Going over to look at the puts, so this is that double top into 1925. This was that inverted hammer candle here. And then this was the retest of the neckline. And so when I say this wasn't too far, I mean, it's still $1 difference, but you could have been setting up a trade to get in on a retest like this after this breakdown. And this is, sorry, the calls, we're looking at 1925 calls, the puts looking at any puts. I just like that because you have some key levels that are kind of hitting these dollar marks. So this was $7 up here. We came right down into $3 here, into $2 here, back to $3. This actually looks like an inverted head and shoulders with another kind of neckline retracement here at 5. But here, again, you could have been getting in like 3 by 2 here, or even done like 4 by 3. All of those would have worked. And another thing I like about these is if you wanted to add to a position, so let's say you get in 3 by 2, and it moves up, and then it comes into 4. You could add at 4 and move your stop up to 3, and the first trade at 3 was break even if it comes down to that, and the second trade you'd be losing an R if it came down to 3. But as it goes up to 5, now you're up, you know, 2R from the initial trade and 1R from the added trade, and then you can do it again, add here, and then move your stop here, and you're slowly, if you're adding every dollar, which I have not done, and I'm sure it'd be a little nerve-wracking to try it, but it looks great on the chart. It's just a matter of, do you have a new plan, and can you be disciplined to get into these as they're moving like that. The other thing that was really nice about this 1920 option is it pretty much put in a low all through here, right above $4. And so anywhere all day, well, not all day, but most of the afternoon, right? Noon was kind of the first time. So you could have been buying this at like 420, 450, and a stop down 350, and that would have worked going up to, maybe 650. Maybe getting 2R in this one, definitely getting 2R in this one, and then definitely getting 2R in this one. And this is the one that I don't know if you were even holding. So let's say you got 1R, 2R, 3R. Let's say that, plus whatever was here. I mean, just trading the same option that moved really well with these dollar increments, set things up really well. If we look at the 1925, it gets a little more expensive because you spend more time in the money. There we go. Much spottier pricing. It didn't have as clean of a look compared to the 1920. So this one, yeah, we come down to about $5 here and about 4 here, and it has similar movement, but it seems like the volume is that much lower. So not sure why that is, but it was cleaner, a lot cleaner to look at the 1920 put and be getting things set up and playing the price movement here. Just having these bodies, candle bodies that are a little bit fuller, just makes it feel like it's working better. Like this option this 5-minute candle had a volume of 120 contracts, and then this one had 30, and this one had 20, and even into the close. I mean, it's kind of surprised there weren't that many. But it means that a lot of people were getting in and out earlier. So like 575 were traded here, and down at the low 158. So just looking where the volumes on the day, most of the folks are probably out as it was getting into this portion of the morning, and not holding, and not as many people were getting in and out of them during this point of time in the afternoon. Still some were doing something, but it just had a lot more people interacting with the price. And that may have been because the 1925 is just a little bit deeper in the money, and the 1920 was just not as far in. And this is the similar range that we traded on Thursday that we did on Friday too. So hope that helps just kind of map out some of the price action with the option. The other way to do it is if I go back to this view and then zoom in here, you can kind of see, there we go. You can see, okay, this consolidation, both losing value, completely sideways, and theta is just decaying. And this is a lot of people getting in and getting out on both sides and just losing value as they go. And then it breaks out, which means the puts plummet and the calls rally. Here's your double top on the calls, double top on the calls, double bottom-ish sort of thing on the puts. It got a lot worse here just because you're losing more from being out of the money. So you take out more of that premium. And then that neckline retest here, you can see it much more clearly. This is a much more well-defined neckline here at this closing price that we retested very cleanly on the call, 1925 call. But on the put, it looks like it's just another shoulder, and this turns into like an inverted head and shoulders pattern. Here's your breakdown on the stock. That is a rally on the puts, breakdown on the calls, and pretty much the rest of the day is breaking down on the calls. The rest of the day here is holding steady. You're in the money, so you don't see as much of the fluctuation. See some as you're losing some premium here, like the price here. This low, I guess we didn't get as low here, so that makes sense if that's lower price. Well, that's higher. So just look at these, map these out, kind of see what you're seeing, or figure out what you're seeing in regard to how things are holding up or breaking down in the same ranges on the options. If I were to look at this, let's look at the 1915 call. Zoom back in on this. Get rid of this purple. Move that. There we go. Okay. So now, let's see, on the right time frame. There we go. Okay, so now you see this hold up a little bit better. You're in the money, or at the money. You see this being, the same double top, but then you don't lose the premium as quickly when you're out of the money. So you can see the 1915 is holding up because we're right at the money, and the market makers don't want to take too much out or put too much back in, so it's just holding steady here. Now it's not having the fluctuations as nicely as the puts. You'd have to go down to like the 1910 to see that a little bit better. So just doing this, just evaluating kind of where these prices are at, how they move, which ones to get into or not get into on the call side or on the put side, either one. It's going to help you, just be able to manage this much better while it's trading live right in front of you. And in some cases, waiting or not getting into it, or getting in and out of something rather quickly, especially if it moves against you. Yeah, I just thought it would be helpful to kind of take a look at this today and see, okay, what's setting up. It seemed like once we got below this 21, we had some pretty constant pressure right on it from above and ended up breaking down here. Now, the nice thing about this breakdown here is it started to go bearish, consolidated really nicely here, which actually gave you a nice opportunity to get in late in the day, and then had a really nice rally for a few R from that point. On the flip side, if you're looking at calls, it very quickly lost value from this point. So, we're just at this point going in the direction of where we've been for this pull day, and that's going lower, going lower, going lower. Okay, going lower, and June expiration. So these are the monthly options, the June 21st options, and so we'll be looking at weeklies again for this coming week and seeing how things map out. Over on the daily, I really do like these two candles. We got to close pretty much right on this downtrend line. It very much reminds me of, nope, not that. What was it? Over here, where we're kind of just sitting right on these, sitting right on this downtrend line. And we didn't have this line in place back then, but just seeing where this is at, and I'm sure if we had just been drawing it then, we could have snug this up a little bit tighter, but I'm fine with another bearish day like this, pulling back a little bit more. Honestly, when I was looking back at, I've got 10 years on this chart, I was looking back, just scrolling through. I counted here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days where we've not touched the 5. And just for me, scrolling back, skimming through, I think that's the longest. The previous longest I saw was 9, or the 9th day we touched. This is 10 days where we have not touched, and the 10th day we still haven't. So that means we could go 11 if we had another bearish candle. Well, also, so this is the 5 minute, not 5 minute. This is the 5-period exponential, which means for tomorrow, once it opens, it as it trades live during the day, this 5-period exponential is going to track with Monday's candle. Immediately, this one's going to drop off, at least using that closing price in the calculation to figure out where the exponential moving average sits. So it may happen that right at the open, the 5-period exponential is going to do this kind of pop and get right up in here, and we'll touch it. Unless we can gap up and stay above it, like we've done. But, you can see when you had this really strongly bearish day, using that closing price, it pulled this way down from the previous day, but it never even touched that candle. It got a little bit lower here, but we were already on the upswing with the stock. And so, you had a couple here, and then that acted as really nice resistance that we just gapped above, from this price. But you can see kind of how this is moving so quickly with it. We haven't had this sharp of a move where we've gotten the exponential at such a significant value just to rally so strongly out of it. All that to say, just by looking at the chart, not even looking at exponential, this is really, really strong and bullish. We had this consolidation here, broke out. Those retest candles, this one retested. That's all the retesting needed to do, technically. I mean, literally, technically. You know, it came right back into the highs here. If we did that again, I mean, we could see something hold at like 1896, 1895. We could totally see it hold in there. And I think back on the 5 minute, right? I think, yeah, 1893. I've got a line drawn in that doesn't come in here, but you can see that that's a really nice high that formed this triangle that we just didn't play into. You know, that was, oh, I took off the triangle. That's right. I was following the consolidating triangle here and then just move this to be horizontal because we're continuing higher lows. So in this case, we pulled back into it and then have been above. So this is looking like we may have another pullback a little bit into that or even further into 1880, 05. I'd be fine with that too. If we came down this far and got in between the 5 and the 21 and then started to move back up. But it could also just consolidate in this whole area for a while like it did through here. So all that to say is this is incredibly bullish. I don't know how far it'll pull back if it does pull back some more. But if it gaps up, watch out. I mean, we could be into the upper 1900s rather quickly and have the potential to make new all-time highs probably by the end of July if we have a gap up out of this and we just continue to rally, because I think a lot of folks are looking for this to pull back some more. It's been so bullish. It's like everyone's just kind of looking for that to pull back and to get in on a pullback and getting into some puts up here, looking for it to, or, getting in puts anywhere, looking for it to pull back some, and it doesn't happen. That would be kind of the biggest trap of all right now, is that it's so bullish. It's looking so bullish. Anybody looking to short it, because we're coming into highs, they would be the ones trapped also. And so, once we get up here, and if we make a new high, by the end of July, let's see, what day would that be? Right here. If we can make a new all-time high before the end of July, I mean, we'll trap so many people. It's still summertime. Doesn't have to do that. We could chop around for a while, build up some more momentum. I would actually prefer that. Maybe not as much as we did for like 2 months here back in January and February, because that was definitely a dry spell. But it seems like this is a really strong V bottom. We've had strong ones here, and that's why I referenced this point in time. That was the last time we had a really strong V bottom and had some consolidation and just chopped. It's similar here. V bottom, consolidation. Okay, maybe it is time to chop for a month, and stay range bound somewhat, by 5-10%, whatever that was. So you can look for that in here, but I guess we'll just have to wait and see and set up the trades that make the most sense to take advantage of it. So, the other thing with the histogram here, seeing this get so strongly bullish, even through that consolidation and pop, and then finally have some pullback and things calm down. We're nowhere near that high on the histogram. We're way down here. So if we're at that location, that's about here. Yeah, that's where we should be, where this is just kind of pulling back a little bit. It still has room to continue up. Maybe not make an all-time high, but it could get into 20, into the $2,000. It could get up into 2,000. It could, like I said, doesn't have to. Don't take what I'm saying that I'm predicting it, that it's going to happen. Trade what's in your plan and your analysis and protect your downside so that you're risking R on the setup and move to trade another day. So hope this helps. This is a little more perspective, on the bigger time frame, as well as down to the 5, how you could have traded monthly expiration and triple witching, maybe a little better than you did. These were things that I was not setting up and not trading during the day on Friday. But it does help to just review and go over it, because there's some amazing candles here, like that inverted hammer. I like these two hammers forming this neckline. Once we got below those, it's like, okay, we're going bearish. These are two really strong candles right here. staying above a previous high. So once those get taken out, it's like, yeah, we're going down a little further. But it wasn't crazy. Didn't pull back tremendously. We pulled back in that apex and held it. So really small candle here. Those are the things I'm looking for. It's hard to wait to this point of the day and be like, okay, here we go. Now we're going bearish. Like this candle was, let's see, that's a bearish Morozu. So shave top, shave bottom, low volume, but it's, let's see, is it a tweezer top? Yeah, the highs of these are the same. So this is a tweezer top, bearish Morozu. Yeah, that's a signal to go bearish. Really, really, really tiny candle. Continuation, flag, continue to break down. I mean, it took out the low of the day, from way back here. So on a smaller day, I think it was 1837 on the range. So a little bit of a smaller day, but we've been seeing a lot of those over the last 7, 8 candles. So we don't have to make a big one. We did a lot of small candles through here. We did a whole lot of small candles all through this, So when you can get into those big ones, great. If you can catch some of the moves of the smaller ones, that works really well too. But you got to trade a little more carefully because you're up on these days. A lot of people are. You're up on these days. You're really doing something that's taking advantage of what's going on out there in the market. So hope that helps. This is Just AMZN.